Zoom record. Um, just a short intro from me. In case you don't know me, my name is John deRoulet. I'm the head of revenue management education here at Wheelhouse. I've been a revenue manager for a long time, longer than I've been with Wheelhouse. I've been with the Wheelhouse team about 4 years, wearing various hats. Prior to that, I worked as a consultant in revenue management, working for a number of kind of larger organizations, both urban and destination. And then for about 8 years prior to that, I was the head of revenue management at an organization called Stay Alfred, where I led a team of 10 revenue managers, overseeing a portfolio of over 3,000 properties across 33 US cities. So, pretty large portfolio. Actually, joined that team when they were very, very small. So was one of the first 10 employees and built that revenue management team up, kind of during the whole era of all of the OTAs coming online, the switch from primarily inquiry-based booking to having a much bigger contingent of online booking, that kind of thing. So been in the game quite a while, especially particularly doing revenue management. So pleasure to kind of be speaking with you all today. Um, Today we're going to be talking about data in Panama City Beach. We have done one of these before in the Panhandle, kind of in the spring. We decided this time that we would probably focus more on specific areas, and we'll probably go through those throughout the summer so that people get an idea of how the different areas are doing. We'll invite kind of everyone in the Panhandle about when we do these because I think it's interesting for you guys to know what the other, even if you're not directly in Panama City, what the other beaches are doing. And if you are in Panama City, exactly what's kind of going on. So you can expect to see over the next few weeks from us some additional data deep dives into other areas across the Panhandle. Um, One quick product thing before I uh, kind of jump into the data. Oops. Where'd that slide go? I don't know why I'm up there. One quick product, sorry, one quick product thing before I go into the data, and then I'm not going to hit you too much with that. But this is being put on by Wheelhouse. Wheelhouse is the premier revenue management platform. So, whether you're a Wheelhouse user, Beyond user, Price Labs user, you're welcome to join us on these data deep dive calls. But if you do want to explore the platform used by the majority of the enterprise customers in the space, we'd love to have a conversation with you. In addition to that, we do offer a lot of these data analytics for free. So much of the market data I'm going to show you is freely accessible to anyone, whether you're a Wheelhouse pricing client or not. We also have an entire portfolio analytics platform that's free. It has a number of ways to see pickup, track year over year and same time last year data, really see your pacing in a efficient and flexible way. I would say, we're going to talk a little bit about pacing quite a bit. That's a big theme for revenue management. And if you need additional tools or want tools that are really, really efficient to see pacing across any group of listing in your portfolio, we are offering that whole suite for free. So just let us know. We'd happy to provide some training and get you set up. All right, enough about that. Let's hop into some things. So before I hop into the Wheelhouse data, and we'll dive into here, I do want to pull up a few data pieces that I was looking at around the market previously. First thing, Jason, you mentioned that you're pretty sure demand was keeping up, and I think that's a pretty good point to make here. Which this is a slide from the VRMA Executive Summit, actually. This one is a mix of data. So you can see here that this is, TSA, Smith Travel Research, AirDNA, and it's showing the aggregate U.S. demand for different travel segments. Now, I don't have a pure demand evaluation for Panama City Beach, but the short answer here is even though these markets are under some pressure, aggregate demand has generally tended to increase. You can see there's a big dip in March, though, for international arrivals, but vacation rentals up here, short-term rentals, has generally been positive in terms of overall like demand, number of like consumers looking to travel, and it has been for a very, very long time, right? We've been pretty positive overall when it comes to demand growth. Now, where we still see pressure in the markets is obviously some of those things will dip. You see international travel dips quite a bit. Also, the supply side. That supply side is the other end of the coin that, like, even if demand is growing, it sometimes seems like for property managers that there's a retraction because the occupancy doesn't go as far when there's more units on the market. Generally speaking, I think this is something that is true in most markets, is that demand has been growing consistently from a consumer perspective. Uh, what's not always matching up is the supply side, and that's where we start to see a lot more pressure on occupancy. But we haven't gotten into an area really in most markets, barring markets that have had some kind of disaster, where there's been a retraction in demand yet. So pretty interesting. And also, please feel free to comment if you have something to say. You can pop in verbally if you like. I may ask you some questions. You can also pop in on chat. I'll keep that open so I can kind of see what you guys are saying. So if I say something and you have some thoughts about it, please feel free to drop in. Okay. So the other thing I just want to pull up is I do have a couple interesting data points that are from the Visit Panama City Beach CBD. They release quite a bit of information. Obviously, they're releasing their tax information. They also have these visitor research reports, which they seem to do quarterly. Now, they haven't released anything for 2025 yet. My guess is we'll see that like halfway through the year, so it does trail a bit. But some of the 2024 stuff is fairly interesting. This is summer 2024, page 10. Yep, summer 2024, even though their tab says 2023. And there's some interesting data here, particularly around the gross tax collection, which I think the most interesting piece on that is in, let me zoom out so you can see this whole chart. So if we look at orange, that's 2024. This trend here, I think, is really fascinating. I've heard this from people in the Panhandle. I've heard it less from people on the Florida side and more on the Gulf Shores side. But some of our largest clients in the Gulf Shores have mentioned, hey, we've noticed that June is stronger than July. They've noticed it in a weird way. They're telling us, like, we thought Wheelhouse was wrong when it was telling us June was as strong as July, but now we see it in our own data. Um, that seems to have occurred here at least once last year in Panama City Beach. Kind of odd, something to look out for as a trend is July kind of catching up or June catching up to July in some ways, right? Is the summer shifting a little bit in terms of when it starts, when it ends? That's kind of an interesting to keep an eye on. I have heard it for 2 years from the Gulf Shores side. Uh, and it does bear out in the tax collection data. The city of Panama City collected more money during June last year. They don't give an
John,
explanation for this. Not quite sure if it's going to continue. Yes.
I'm sorry. So last June, I don't know where their data, how they calculate their data, but obviously in Escapia, our data is calculated based on departure. And we had
Mhm.
5 departure Saturdays last June and 4 departure Saturdays in July. Summer of 2023, I believe it was inverted. This summer, we have 4 departure Saturdays in June and July. Sometimes that'll skew the numbers between June and July. That's one of the things that I've seen, and that could skew the TDT collections there. But like I said, I don't know how they see their data. But I will also say one other note real fast. In the last couple of years since COVID, when schools started going back to normal, I don't know what when Atlanta area schools went back prior to COVID, but the last couple of years they've been going back August 1. And that has made our last week in July. I don't know that Atlanta's a huge feeder market for us. So when they move stuff around, we see that. And that has made the last week in July a lot softer than it was like 5 or 6 years ago. I'm not looking at data, but it feels softer than it used to be.
Yeah.
So I'll knock off here.
No,
Um,
that makes a ton of sense. Yes,
no-
Susan.
Another thing to note is that Memorial Day fell all in May this year, and last year it fell in June. So that also is going to
Mm,
impact it as
Yep.
well.
True.
that makes sense too. Something I would look out for. We'll see. I don't know when they're going to post this. I would imagine we'll probably see this at the end of the year, but it'll be interesting to see if you see it in your data. I think it's probably a mix, right? Because both June is up and July is down a little bit. These are pretty big swings across the board. So it's probably a mix of all these factors and maybe also a little bit of just some behavior shifting. I've had a hunch that the last couple of years, certain segments of travelers are also just looking to travel where it's a little cheaper. So you actually see strength in places that were traditionally weaker because they start cheaper and people book them. Like you get a little bit more advanced booking in those areas that kind of pad on occupancy, and people compete in the higher priced areas in a little shorter time frame. I'm not so sure if that's true. I have a few hunches that it's the case, mainly because I see in a number of markets where people are pricing competitively for the fall already, that there's really strong fall pace. I also see it around holidays where people like early on will book around a holiday instead of on the holiday itself. Um, the holidays fill in eventually, but I do sometimes wonder if that like there's a contingent of consumers who are more flexible with their travel dates, but they need the budget to be right, and they'll purchase where property managers aren't pricing quite as high yet, which inevitably, because a lot of people are using dynamic pricing, turns that into a high priced time period. Okay, there was one other slide on here I wanted to show you. These things are kind of interesting. I like to show these just because the reason I pull up other data is, hey, if you're using Wheelhouse or you're using key data, you know, your owners are used to getting that data, and if they're kind of annoyed by their performance, they are going to argue with you about it. It helps to have different data sources that are definitely neutral. Obviously, key data is pretty neutral. I think people should believe that. All your data companies should be, but I usually like to give people multiple data sources so they can see like, hey, multiple people are saying these things. You know what I mean? And so obviously a CVB in Panama City Beach is going to be pretty credible. Um, if you're trying to make a case about like what could be happening, things like this help make that case. And you can combine them with things like key data and stuff. I actually will show you that key data is one of the providers here in Panama City for their CVB. The other piece I wanted to look at here was we're going to stick a pin in this because I did pull up the spring data, but this was kind of interesting to me. Really, really strong previous visit to PCB, and this has fallen for some reason. I'm not sure. They don't give an explanation for why, but year over year from 2023, less first-time visitors. I think that is something to really keep in mind because there has been a lot of inventory growth across a lot of these markets, and that means there has to be first-time visitors. Now, obviously, previous visitors won't have come back every year, so that's still a bigger pool than it looks like. But this trend is kind of an interesting thing to me, and I'm not sure what causes it, but something to stick a pin in, right? More people in 2024 had visited PCB before, less new people had come in as a percentage. The other pieces here, I'm going to touch on this one. We'll stick a pin in this one too, because I do want to pull something up for spring. People who come during the summer really love the beach. It does give you an idea of what other beaches people, you know, have said are great. When we look at spring, this is a lot different, which is fascinating to me. I would have expected them to be a lot more similar, but when we pull up the spring one, first of all, interesting. Generally higher first-time visitors in the spring. So more new people are coming. Even though that's gone down year over year, it's still higher than summer. And when we go down to this here, this is way worse. So there are more first-time visitors coming in the spring. And those first-time visitors in the spring aren't liking it as much. I think, you know, across, and you see here, when we looked at summer, they're mostly talking about Florida beaches. They're not all Florida beaches, of course, but there's a lot of Florida beaches here. This is a way bigger list of beaches. So this spring customer is way different. I think there's probably a lot of work that needs to be done to make them really like the spring. And I bring this up because spring has been under pressure across the Panhandle in Florida for, in my opinion, a couple of years. It often doesn't achieve the expectations that people have for it. I think partly that's consumers in the spring are, you know, it's just not as strong of a period as it used to be. It still has a strength, but it's just different, and it's very clearly a different consumer because there's totally different satisfaction kind of situations and profiles of customers coming. I'm not going to hit on spring too much because we're in summer. I just thought that was really fascinating that there's such a difference here between like how many new people are coming and how much people consider the of the people who are coming consider the beach to be their favorite. Last piece before I move into some straight kind of wheelhouse data. Where was that? Oh, this feeder markets. You have a lot of good data for this. This is actually from Key Data, so this is pretty helpful. Here, interesting for me to note is the slight differences between hotel source data and vacation rental source data. Much broader for vacation rentals. Like you said, Jason, Georgia is a major feeder market here. It's the top for rentals, and it's the second top for hotels. Uh, Alabama's in the same spot. Florida, interesting to me that Florida doesn't appear on this rentals list. No. But these things I think can be useful just because understanding where your guests are when you're trying to kind of like figure out where things are happening. I think what Jason did there, pretty intuitively, is really important. Thinking about where these feeder markets are, how they change, what the behaviors are going on there is a huge piece. I know I'll give you an example of that is like Sevierville, Tennessee, the Smoky Mountains, has had some weakness this year. And you'd really have to know that like one of the highways was closed and pretty much everyone in North Carolina, it was a lot harder for them to drive over. So they lost a huge portion of their feeder market for like an entire season. Knowing what these feeder markets are doing is going to be really helpful for contextualizing what you might be seeing in your portfolio. Okay, enough of this. I'll send you guys these links to these if you want to use them for anything. Keep in mind that this is, freely available data in your own CVB and pretty useful. So let's hop into some market data. Anyone have any questions or comments on that, or does that spark anything or make you think of anything interesting that you want to bring up to the group? Nope. Okay. So first things first here. I am on the Wheelhouse market reports. If you are logged into Wheelhouse with a free account, you don't have to be a Wheelhouse pricing customer, but these market reports can be accessed from this tab up here. You can actually access any market in the country. So you could look at the other beaches too if you're trying to figure out how you're competing against each other. This is going to be pretty high level market data. So you can see here that we're looking at a pretty wide area around Panama City. We also have this data that's free is really good for kind of understanding general trends and what's going on. If you're using our pricing system, we're going to be much more granular in terms of like where the prices are developed from. We do also have another data tool called our sets data. We may use a little bit of that today if we get a chance. Sets data is going to allow you to basically create a custom area and really fine tune the kind of listings you want to look at. This is partially free, partially paid. So if you want this data aggregated and tracked for you, it is going to be paid. If you want it, but anything on this map is free. So you can see quite a lot of data in aggregate across the units, or you can see all the way down to the individual listings. So this is like both a comp set tool and a benchmarking tool. We're going to float here for now and hop into a few things. Few things I just want to point out here is listing growth still occurring in this market. We're still observing new listings kind of packing onto the market. Something that during that VRMA presentation, exec conference that was mentioned is across the country, we are seeing listing growth really slow down. So we've gone through years of really high listing growth, in some cases, listing growth that has outpaced overall demand growth in the country. So even though demand has been growing, we've seen some attrition across some markets, particularly on the occupancy side. That countrywide is slowing quite a bit, almost to a net zero. It hasn't started retracting yet. I don't know that it will really start to retract for a little while, but we are seeing some slowing there, which should start to relieve a little bit of pressure if demand continues to grow. Couple other like highlights from there, just because we came from there last week. At the national level, we are seeing things seemed to kind of level out. The overall perspective from both key data and from me and from AirDNA was things probably are going to start to look are still going to look like 2024 in a best case scenario. So something to kind of keep in mind there. First place I'm going to hop into when we hop into this data, though, is I'm going to hop into the trends page. Trends is a great way for us just to kind of see the overall occupancy situations by month, by year. I'm over here on the adjusted occupancy, and you can see that we've got each month, year over year, and I'm going to switch this so we're just looking at every listing in the market. So we had it on high. I'm switching to every listing in the market. And I'll switch a few things off here. We don't need to see 2026, and I actually don't need to see 2023 right now. We're just going to look at what's going on year over year. Few easy observations. Obviously, Q1 is low season, pretty stable to last year. Not a lot of, difference. That's actually something we've consistently seen across most markets in the country is that January in particular, start off really good. Things were like generally better places. Once we get into February, we maybe start to see some attrition, and then we see some pretty solid attrition through the spring. Now, most interesting thing to note here is obviously we lose a little ground in March, we gain it back in April. Big portion of this is probably attributable to Easter moving and wherever the spring breaks are falling, obviously. This, I think, in Panama City, though, looks pretty good. So when you look at some of the other panhandle markets or all the way into Gulf Shores, Alabama, spring really suffered in all of those markets to a much more significant degree. If you're talking to people in some of those beaches, you're probably hearing about a lot more stress at the market level. There's also kind of a feast or famine effect going on to some degree, which what I mean is that even though the market level is maybe maintaining across March, April, has some differences that portfolios will be pretty varied within that. You'll have some portfolios that are pacing really well, doing a lot better year over year. You'll have some portfolios that are actually have a lot more vacancy and are doing a lot worse. We tend to see that kind of come across in data around, let's see here. Where did that go? Data around this. Segments. Luxury, doing really well. Upscale, still doing pretty well. Budget and economy, getting massacred, basically. I mean, these numbers aren't huge, but that's where you're seeing kind of like, even though the aggregate level is maybe pretty even, there is a mismatch depending on how your portfolio is doing. This is a countrywide one, but it's true in most places. And so you may have very different stories about performance because there is that kind of feast or famine effect. Now, I think this is pretty interesting here is a lot of people across the Panhandle really panicked in March and across other Southeast markets because March came in a lot lower. This came in a little lower in Panama City, but not as drastic as I've seen. And you actually did make most of it up in April. When you talk to some of the other markets in the Southeast and even in the Panhandle, sometimes this April never made up for March. So they're just down 2 months in a row, right? Some of this may have been recovered because of rate. Pretty dynamic market here. But overall, from an occupancy perspective, still able to capture pretty good market share and not down as much as I've seen across other markets. Now, we are still down a little bit in May. And the question becomes, at 55% for June and 32% for July, is the market on pace? I did a little calculation on this. I'll show you how I did it. But the short answer here is last year at about this time, the market was around 57% on the books. And in July, it was about 32% on the books. So right now, the summer is pacing pretty close to what it was last year. So I would say that this market, even though there's been a little attrition in March, there's quite a lot of stabilization here, especially compared to other markets in like Carolinas, other markets around Destin, even a little bit compared to Gulf Shores and definitely compared to Texas. Pacing seems pretty good here. You guys are probably in some of the best shape in terms of like, hey, this looks like it's going to be like last year. Maybe there's a lot more movement going on in the ADR perspective. You got to actually revenue manage it, but you are maintaining the market position from an occupancy perspective in this market. We do know there's some listing growth, so that means that that listing growth is actually being absorbed pretty well overall. So I think that's a pretty good signal for you guys. We've been doing this multiple times a week for the last like couple months, and other markets are a lot more stressed out than what we're seeing here. It doesn't mean that it's easy from a revenue management perspective, but there's definitely not big chunks of pacing missing. Where we've looked at markets across Carolina over the last few weeks, and we're talking like the markets are pacing behind like 10% for summer or more. Same with like New England, right? Part of that may be when we looked at that market data up here. A lot of people have been here before, a lot of return guests coming, really bolsters, a lot of people, especially for summer, saying it's their favorite beach. So a lot of opportunity, big pool of customers who are going to come and help you keep pace. Now, one thing I do like to check here is I do like to look at the highest performing listings just to see if there's a little difference in trend. Not a ton of difference in trend here. These remain pretty stable. Obviously, all total occupancies are higher in the top performing listings. Little better situation for spring, actually. They were able to maintain in March the occupancy at the market level. Really didn't lose much ground at all in May, and made additional money in April. So if you're in the highest performing listing group here, you might be saying that this year looks to be a little better than next year, right? So I think Jason mentioned that at the beginning, pacing really well. Not necessarily easy, having to do a little bit more with rate, but definitely able to maintain the year-over-year position. You may be one of the few markets that I've done this with that is actually on track to do that this year. So pretty good to pay attention to. I think the one thing to consider would be not every other Panhandle market is in this position, and just being aware that more so this year than previous years, you may be competing with nearby markets, not just nearby properties, right? As consumers look for deals in the short term, we've seen that short-term windows are really strong, but they're also really volatile. And you may end up competing with markets that are nearby, pacing poorly and collapsing in their rate position. So just something to watch on a week-to-week basis. Does pacing really get it change? Is the competitive situation changing, and will you have to compete differently in the short term? Okay, let me give you a quick view on how I was calculating this pace. So basically, we have what the occupancy was last year and what the occupancy was this year. If I go over here to this historical, which is the daily view of these, so we can see strong Memorial Day, really strong kind of spring break this year situation. This was a lot weaker in a number of other Panhandle markets. If I go to the left to the distribution chart into lead time, and I bring this to June, and I find how far we are, so we're about 30 days. That means that about, when I look at this, 28.5%, or I wanted to be on this one, 23.5% of listings still had a lead time of less than 25. So if I take the inverse of that, 77.5%, and multiply that by the last year's occupancy, 74%, I get to where we were last year. So that 57% is kind of like a cheap way to use market data to get to like kind of roughly where the pace was. And just as a reminder, that was 57% last year, so very close in pace. For July, it was 32%, so pretty much right on pace. And that is also true for the high performing listings. They're about on pace too, where last year this was at 63%, and this year it was at 39% for July, so slightly behind in July in the top performing listings. Okay. Any questions or comments on that? Anything ring a bell? How are you guys pacing right now? We know Jason mentioned he's pacing pretty good. Seems to be following the market. Are most people here pacing well? Or anyone experiencing issues with their pace?
Our pacing in August is way up, so something's different this year than last year for sure.
Um, that's an interesting comment. Are you doing anything with August, or like are you pricing it different than you normally would this year?
Jason would be the answering on that.
Our hey Dave, I thought I recognized you. Yeah, our August is pacing up. I am doing something different. We are using Beyond, John, as you probably know. I've been obviously looking hard at Wheelhouse and decided to put off making a move for a year because of timing last year. But anyway, yes, last year Beyond's pricing had our August rates too high. And I missed it, I guess, is what is probably the best way to put it. You know, that first week in August, the problem is, like I said a minute ago, end of July is softer than it used to be, and first, week or two of August. I mean, geez, it seemed like back in 17, 18, 19, we could get July rates into August for at least the first week in August for a lot of properties, sometimes first 2 weeks in August, obviously, depending on the property type. Doesn't feel like it's that's the case so much anymore. This year, I am managing August significantly more aggressively. That sounded weird, but I'm managing it more aggressively, and just really watching. Uh, kind of how I do things is I look at and see what we accomplished last year, and I kind of base like my goal setting on what I did last year and the year before. I'm watching all previous years, but that's kind of how I'm handling that yield management, if you will. So yeah, I am definitely doing something with August.
That makes a ton of sense. And honestly, so when I did this VRMA executive presentation, I have my own data in here that's a little different that you guys might find interesting. One of my stories here, so I don't have Panama City in particular, but I chose some of the other panhandle markets. And what this is this is an aggregate of how our users, who tend to be professional revenue managers or people pretty involved in revenue management, we are, we are the primary enterprise solution in the space. What they're doing. And I chose Panhandle because they're pretty like across the Panhandle and even and Gulf Shores, pretty sophisticated revenue management. And the most interesting thing I noticed here was there's actually people who are starting to do things as far as like September and even October to their strategy. They're already making adjustments. So they're looking pretty far out. I talked to a lot of people in the space, and a lot of people don't a lot of people don't look further than like 30 days out. Some people look further than 60. Then some people are looking like almost 2 seasons out, right? So they're pretty big difference. And I think it's really wise to be looking out towards August. You can see here that there's some shifts in August occurring. There's pretty different across these different markets. They're, zero would have been they're not really adjusting anything. Or
John,
they're
something
like,
I've noticed a lot of our competitors doing is and maybe some of those on the call, and maybe it's their choice, and maybe they've got owners that are tightly managing how they operate. But the problem is many of the properties, for instance, that came on board with us this past winter, the management, I don't think it was anybody that was on this call, but the management companies they were with had rates way too high. I mean, we had a home that we brought on that was right next door to another home that we had. We did 75 in revenue, and this other new client did half that. And they're like, "We don't understand. We're charging 1,500 a night in the summer." And I'm like, "Well, what was your occupancy?" You know what I mean? It was like, they just didn't have any rentals because the pricing was wrong. It's not about having the highest price, it's about having the right price, and you know that. I think everybody on this call knows that. But that's I don't manage rates like that, right? I figure out what the right rate is, and I price it like that forever. And then if pacing is good, I'll push pricing, and that's how we make more money.
yeah, that base of business perspective, I think, is something I've consistently heard among the enterprise revenue managers. And if you guys don't know, we also do a series called the Revenue Management Roundtable, where we bring on revenue managers from property management companies and just have a conversation about like what's going on in the quarter, what's going on in the strategy. We actually just held that, I think, 2 weeks ago. So I'll have you guys send it. It was a pretty good group. It was like the Monarch Collective, which has a couple big portfolios in the Panhandle. We had a Way Day, a couple big portfolios in the Panhandle. Their revenue managers just talking about strategy. But that, for those enterprise level revenue managers, that base of business concept is huge. I think people are we still haven't dropped the premiums that people had put on after like the far future premiums people had put on after COVID. I think it's a mix of like, one, not really realizing that that strategy is not helping people anymore. Two, people honestly, property managers often just don't have time to pay attention past a certain point. So if you just keep the premiums high, even though you're not really competitive, you're also not like underselling. And that means that there's actually a lot of space if you optimize further out to just take market share without actually having to go under what you did last year if you're paying pretty close attention to it. I show this because this is an example of some other markets where I think that the revenue management isn't quite as developed. And you can see there's just premiums out here. These, other than Branson, which has started to make some adjustments for the fall, everyone else just has kind of premiums going out past a certain point from the summer, like this shape is pretty consistent from here up, whereas we see a lot of deviation in these panhandle markets where among the wheelhouse clientele, there's quite a bit of different sophistication of revenue management.
I'm sorry. Aside from just the rate game, I think it's also been a minimum nights shift as well. Like a lot of people tried to hold 7 nights for way too long, just because that's something that the area is used to, and they needed to drop sooner than they probably did.
100%.
Yeah,
Yep.
100% agree.
I often tell people when they talk to me, I actually have this conversation more in ski markets because they are very resistant to dropping their minimum length of stay. It was like, drop your minimum length of stay before your rate. I mean, assuming your rate isn't just like exorbitantly high, but it's a great early thing to do in some cases. I think there's a lot of data here. I don't have any pulled up, but stay lengths are shortening across consumers. I'll tell you what, I'm a millennial. Like I don't have a family, but a lot of my friends are, have families. I don't know anyone in my peer group who's booked a 7-night stay. It's always like 5 or 10, but I don't think I've ever booked exactly a 7-night trip anywhere.
What was interesting too is that, I mean, we actually, I don't want to say we had the same length of stay overall across the board, the average, but there was some when we decided to drop the whole, hey, we're holding Saturday to Saturday. We actually got people that ended up booking 10 nights instead of 7 because we were open. You know what I mean? So it's just a game.
Yep, it's just a game. That does go into something that I think is really key though, which especially if you're pacing behind or having trouble, look a little further out. There is opportunity in August, September, and October right now, I bet. If we look at asking rates, so asking rates are the averages of how people are pricing in the market, right? So this is like not what's actualizing, this is just how people are pricing out there. And I do like to look at this one because it's pretty helpful. Now, let's pull off 2023 so we're not too noisy. This market is a market that's pretty stable. Like you guys are pretty in line with the year over year. You're pacing well. As a market, you guys aren't putting as massive premiums as I see in other markets. Like you will look at markets and they'll be like, oh, May and April were down 10% in occupancy and the rate is like up here, right? That's not uncommon in our space. You guys are actually pretty stable. So there is a lot of revenue management going. That's also kind of a call to action for anyone. It means you have to pay attention because other people in the market are doing a lot to pay attention to their rate position, because these are pretty stable year over year. People aren't pushing too hard, especially where there's a little attrition in May. There's a little bit of push. This isn't massively overpriced, but you do see from August forward, there is a little bit of a premium on the market still that people are just putting in place. Little less so in August, but it's still there, right? And this is like, if you look at this, it may be hard to see, but where this kind of stacks up kind of consistently above, you can kind of guess that this is where people stop paying attention for the majority of just kind of probably property managers. And this is where there's quite a bit of opportunity to make up ground if you're pacing poorly, or if you're pacing well, just continue to take a lead. Is the market is priced quite a bit above what it was doing last year. And that means you have room to undercut the market without undercutting the historicals. Now, obviously, this is going to depend on where your own historicals are if you did really well. But I have heard from a number of people in Florida markets that fall is actually pacing pretty well. I think consistently fall has been a lot stronger year over year and beaten people's expectations. I think in some places fall is almost better than than spring. I've heard that from Gulf Shore clients that fall has been like really phenomenal. And I think it's a mix of two things. I think it's a mix of the consumer looking for places like I've heard it's kind of a secret. Like the fall is a gorgeous time, but people don't know to go. It's a great time. People are figuring it out. Two, revenue, like property managers don't expect as much from the fall, so they don't overprice it the same way that maybe they do during certain spring periods. And because they're not overpricing it, they get a longer booking window. They get people who are able to book it at a reasonable price, and they actually drive a lot more occupancy, and that makes the performance better. I think it's kind of a mix of those factors. This year, too, I think that because of there's a lot of instability and financial instability in the news, I think some people just delayed their trip. I only have anecdotes to support that, but there's a company called Cape and Coast in on not in the Panhandle. I don't know what you call the rest of Florida, the Pan. um, they were mentioning that they have really good same guest, like return guest data, and they noticed a very large contingent of guests that traditionally book in the spring that didn't book in the spring but had already booked a stay in the fall. So just some shift where people who maybe didn't book because of instability, there's opportunities here if you're being competitive and playing for that. And I think that's what Jason was mentioning too. August is looking really good. Well, they're also paying attention to it right now, which is really important. I'm a big fan of like if you're gonna budget out how much time you're gonna spend on revenue management, I would probably say like spend like maybe 50% of that between 30 and 60 or 30 and 90. Spend maybe 25% of that on the next season. And then really honestly spend less than 20% on the next 30 days because the answer is going to be pretty easy. Normally you're just finding where you need to cut the rate, right? But you can't do too much to optimize because the market's moving around so much in that last 30 days. You're really just trying to like shift your view to like, okay, how do I optimize the occupancy and not worry as much about the ADR, getting the ADR right, because it's going to change day to day. And at the end of the day, you have the least control over what's going on in that 30-day period. It's really impactful. You need to get those bookings, but you actually don't have as much you can do as like making adjustments out here or even starting to make little experiments out here. Yes, Jason.
Yeah, so maybe I'm tipping my hand a little bit on my technique, but this really shouldn't be proprietary knowledge. But I price based on historicals. I mean, like you talked about a minute ago, one of the reasons why our August is doing significantly better is because last year pricing was set too high, and this year I'm watching. I have pricing set lower, but I'm watching the performance and making sure I'm not really dipping below kind of what I achieved last year with properties. Now we do have the luxury of having like 70% of our inventory having been with us like 6 years or more, 7 years or more. I can't remember what the number was last time I looked, but I think a lot of the people on this call probably have a lot of the same inventory and have had that same inventory for a long time because they're probably good managers too. But the point I'm trying to make is that if on one property your ADRs for August last year were like 500 a night and you got it priced at 750 a night, well, it's obvious why it's not booked and your occupancy is low. And if you're going to wait until July to correct that pricing, all the potential bookers between now and whenever you change your pricing have booked someplace else. And if your August occupancy for the market is going to be 45%, well, the potential bookers that are looking to book, that pool, I mean, it's only so many people. I don't want to have a limited mindset, but the reality is you're not going to be 100% occupied in August. So you should be priced correctly. That's why I price correctly forever. I mean, I price correctly like 365 out for that specific reason, because I want to make sure that when people are ready to book and they're looking at my properties, the pricing is where it needs to be, not 30-40% higher because I'm thinking pie in the sky, hey, maybe I'll get it because maybe I will, but if pacing's good, I'll raise price. But you're probably not going to get 30-40% more next year than what you got this year unless there's something weird going on. So
yeah, that advice is actually the exact advice that I give to people, both when they kind of audit at the end of the year, and it's the first thing to check when people talk to me about like, hey, I feel like my pacing is down. It was like, how in line is your rate position with your historical actualized averages, right? Whether that's at the listing level or you develop it for multiple units, because it's like your own historicals are at least a solid data point you have. You may decide, hey, I want to improve on that or I want to do this, but make that an intentional choice, right? Don't accidentally realize that like, oh, I've just been pricing 30% above whatever I've done. No wonder I'm not pacing well, you know? Definitely solid advice there. I'll show you something in the last few minutes here, how you can see that. I know it's like sometimes difficult to get to that data or know when you have a million properties where everything is. I did just want to flip this over to the high performance group and just see if there's a significant difference here. The only major difference I think is this is kind of interesting. They seem to push April a little bit more, and that was successful for them. So that top end captured a little more over Easter. These are a little tighter, so there's maybe a little bit more conservative rate position for the summer, but still pretty much in line with the historicals. And we still see a little bit of premium out here, especially out in the fall. So they're really not trying to compete as a group. That seems to be kind of a market trend. Also not an unusual trend in the industry, although I actually think you guys are doing it much less than I see in other places, which is good. Okay. Well, I think that's kind of the main stuff that I wanted to go over today. Just give you a little overview of what's going on in this specific market area. I did have some sets data, but I think it's going to be kind of redundant. I think the trends will be pretty similar. I did want to show you guys one thing because we've talked about a few things that are pretty helpful. I'm going to set this. I'm on this business intelligence tool called our performance page. This tool is for your let me think here. This tool is for your own properties, but you can pull market data onto it. And this is a way that you can see a number of the data points that we've been talking about. And this is a free tool. So if you log on to Wheelhouse, whether you're a Beyond customer or Price Labs customer or doing this manually, you can access this business intelligence tool at any time for free. You can see here that I have the ability to filter up and down to all kinds of categories of listings. You can even set custom categories, so you can easily get to these lists of listings that you want. And if I switch these, they're just going to roll up and down pretty quick. Now, this chart, what it's showing, I have it on kind of a noisy view, but I'm showing the daily level occupancies. I'm going to switch it to booked nights because I personally prefer that. But you can switch the KPIs you have. And what it'll show you is like what is on the books to stay on that night. It will highlight the recent sales, so you can easily see if something is picking up or something is vacant. And the interesting thing here too is you can also show where you were last time. So you can very, very quickly identify the pace for a group of listings. You can see like, hey, in purple, I'm pacing pretty high on these dates, a little bit behind on these dates with no sales. It makes it very easy to decide like where you might make changes in your own system for pricing. The other thing I wanted to point out here is you do have some abilities to see kind of where your pricing was compared to your actuals. We have other tools which can help you kind of diagnose like if your rates are in line with your historicals. But one of them here is if I pull up this observed price and I'll zoom into future dates, and I'm going to turn these booking lines off, and I'm going to throw on last year's ADRs. So what this is going to show me, and this is a little faint, but I have last year's ADRs here, and then this is showing me the range of what those same units are pricing at this year. So you can see I'm pretty unoptimized over here. I'm like, way higher than what I was doing. My top end is really high out here compared to like where I average on my ADR. And then you can still throw your occupancy over the top. So it's like, okay, well, I don't have any bookings out here where my top end is super high. Maybe I need to go adjust that. If I throw on the sales in the last week, I'm really not selling in some of these areas that are unoptimized. So this is one way that in an aggregate level, you can kind of see if your like pricing is in line with your ADR. If you were digging into an individual listing, you can click this and you actually can just see the historical bookings next to your rate on a chart. And again, whether you're using Wheelhouse as a pricing customer, you can actually access all these visualizations for free. So let me let this load real quick. I'm doing something weird on the settings here. Let's do this. So you can see here, this is maybe not a good example for illustrating anything, but if I pull off this line, because this is what Wheelhouse is doing, you can see what your price is in the PMS in blue. And then we'll also show you, we'll overlay what the historical pricing is. So this is a visualization you can use whether or not you're using Wheelhouse pricing along with that performance page. And I highly encourage you to reach out to us if you want to get connected with our business intelligence and would like a little training. We have revenue managers on staff. We'd be happy to work with you to kind of help you build some processes around it so that you can really pay attention to your pacing and also be able to double check the kind of advice that Jason and I gave you. Because like you said, Jason, I think your techniques are really good. I don't think it harms you to tell other people in the market, because an unoptimized market probably harms you more if prices collapse in the last minute booking window, you know?
Well, I think it scares guests off too. If pricing isn't right, they might find a different market. I mean,
Yep.
our market is one of many, many, many markets that offer basically the same amenities. You know, if you're Panama City Beach or 38 Loyal, I mean, that's great. But you know, we've definitely gone to different markets to vacation because pricing seemed out of whack in one place or another. We could have the same experience someplace else. So
Yep. And I don't think your spring was like much more stabilized than what I've seen in like Destin and Santa Rosa. But I think this is a big point. This is spring, a lot less satisfaction, a lot broader concept of markets. And I think that's an area that people tend to consistently overprice is spring. And it just makes sense, right? People are choosing other places. Yeah. So awesome. Cool. Well, I hope you guys found that helpful and interesting. If you'd like to talk to us about Wheelhouse Business Intelligence or Wheelhouse Pricing, which is a great system, we're used obviously by people like V-Trips, Avant Stay, Brett Robinson, Natural Retreats, 360 Blue, so pretty large companies. We'd love to chat with you. Otherwise, you'll probably hear from us that we are going to be doing a few more of these in the other Panhandle markets. You're welcome to join and hang out. Otherwise, we'll probably hit this a little later in the year. And look forward to seeing you there. Thanks, guys. Bye.